Welcome everyone, and here we are with another episode of Smart Investing with Clem Chambers and Zach Meir that is going to join us very soon. So Clem, let's get started. Welcome everyone, and here we are with another episode of Smart Investing. That was the play. Exactly. Okay, right. I'm just okay. Let's restart. So everybody, welcome back to the Financial Fox Smart Investing webinar with Clem Chambers and Zach Meir that is going to join us very soon. So we have a Clem, and that's a great moment to talk about crypto perhaps.
It's always a great moment to talk about crypto. And I know you're going to ask me about Shiba Inu.
Yeah, exactly. I mean, I got so many people that texting me and say, oh, Steph, is there a good time to buy Shiba? You know, might go up, I might go to the moon. And you know, it's kind of like, it makes me freaking out, really.
Well, I've got to tell you, I didn't buy 10 million of them, or it would be 100 billion of them. It's a very small one. No, I haven't wanted anything to do with this particular coin ever since it started, because this is definitely one for the birds. But the whole thing about these tokens is it's all about brand. And it's all about momentum. In the same way as if you get a old banknote from any country you like, really, it's not money anymore. And it probably was quite a lot of money when it was money back in the day, but now it's worthless apart from anybody who wants to collect old worthless banknotes. Yeah. And the value is what a community want to sustain it at. The same way with the dollar or pounds. And so, you know, if there's there is a huge community of people that think this token is great, because I've been watching the actual trading traffic of this now for several weeks, and it's been the top trading volume traffic token out there. And I've been looking at it going, yeah, right, yeah. And it's exploded because it's got a great brand now. The community has made the brand, the trading volume is massive, and bang, it's arrived.
But Clem, when the dog coin go to the moon, is not the time that the market is too hot?
Well, that's a good question. You know, is this a top of the market event? And it's certainly a hot market event. It's certainly a boom bubble market event, but bubbles can go, you know, amazingly high, can go beyond all expectations of people that have got, you know, any sort of grounding. I mean, just look at Tesla. Tesla's worth $1 trillion, and Elon Musk's share of the value of Tesla is equal to Ford and General Motors market cap ×2. So it only makes vehicles, and you know, it's worth more than all the other vehicle companies on planet Earth put together. So where's the sense in that? The answer is, that's what the market says, because we're in a particular set of circumstances that brings about that valuation. And you know, it's the way the market is at the moment, with all these huge sums of money that have been printed by central banks. And the same goes for crypto.
Clem, other question, is there a good time to look at real estate? That's another question that people are asking. It looks to me we can apply the same concept of a bubble even there, or perhaps not.
Well, I mean, the way to look at it is it cheap or is it not cheap? Do you want to buy expensive? It's going to become more expensive. People are in the UK, for example, and in large parts of the world, are totally addicted to real estate. Absolutely, totally addicted to it. And I'm not, so I'm not the one to say. I mean, I've ended up with a reasonable amount of real estate by accident, and I hate it. But, you know, it's a very good hedge against inflation. And that's where we are right now. But I think, I mean, most people pile blindly into real estate, and it does nothing but kiss and cuddle them in return. So it's not for me to say it's too expensive, it's gone up too much. I could have said that 3 years ago, could have said that 5 years ago, could have said that 10 years ago, could have said that 20 years ago, could have said that when I was a little kid. But the actual value in real terms has gone up significantly. Now, you might say that the value of real estate hasn't changed at all, and that we've actually seen that lots of things drop in price and in value because they can be made a lot cheaper with technology. so that the only real value, the only real intrinsic value is land and property, because they're not making any more of it, in a sense that they're not making any more land. So, you know, it depends on what you want to do. If you don't want to take risk, then you don't want to take risks. So maybe buying property with a small mortgage, a 40% mortgage on the 100% of the property makes sense. If you reckon the whole world's going to go to hell in a handbasket with inflation, you want to get as big a debt as possible and put it in as much real estate as you can, because the inflation will destroy the value of the debt, and the property will go up, even not in real value, but will protect. You're basically doing a negative interest rate play. You're doing a carry trade by buying real estate that's not going to go down in value, while the value of the money you borrow to buy it is going to collapse. So it depends on your pitch. I personally would take the latter. If I was interested in property, I'd borrow up to the gills and buy as much solid property as possible, and you know, let inflation do its work. But I don't like property, so I haven't done that.
It is interesting because some people are saying that perhaps even the UK, with this problem about climate change, we might be underwater in 2030. So you buy real estate and then maybe you're going to end up with, I don't know which kind of value. But talking to my parents in Italy, the value, the market, the housing market, it doesn't seem up so much. And I really don't understand why, okay, in the UK is like that, but why in Italy it's not so easy to kind of buy cheap.
Because you can't get debt.
Yeah, that perhaps is the point.
Yeah, I mean, debt is what drives values of these things. If you give students larger quantities of borrowing capacity to buy their courses, what happens is the courses go up in value. Rather, courses go up in price because the universities go, hey, here come the customers with a handful of money. We can deal with that. Yeah, and it's the same with property. Hey, 3 times salary, 3.5 times salary, 4 times salary, 5 times salary. Right? It was 3.5 when I was a youngster, and now it's 5 times. I don't know. I've lost track. So the houses will go up in relationship to how much you can borrow. And if your interest rates go down and the amount you're allowed to borrow goes up, then you will get the prices will just go up, because people buy what they can afford to finance in property, and that's the driver of price. And you know, you've got a credit crunch out there. You said that nobody can have more than 50 LTV, and the interest rates are 9%. You'd see property prices halve, or probably even worse. But it's not going to happen.
Yeah, but isn't it a scam as well?
Well, I mean, financial services as scams? No, surely not.
No, I think the only part which you missed out is that there is a culture in this country of real estate, and I think that's something that even if it went down, 90%, that culture would still be there. It's like there's a culture for drinking lager rather than drinking wine. I mean, different countries have different cultures.
I agree. I said that before you logged in. I said that people, in fact, not just the English, people around the world in various cultures are crazy for real estate. They just can't get enough of it. They don't care what they pay for it as long as they can keep it.
Yeah.
And it is a patient money business. If you look at all the very, very rich people in the world, about 60% of them are property, make their money from property. And it's been a one-way bet. It's been a 7% compounding thing since I was a infant.
Yeah, but they made money from property. If they put that money into stocks when they were kids, they might have made 10 times the amount they made in property. But they say, "Oh, property is what's made me rich." You see what I'm saying? So I mean, that's the other thing.
You can get great leverage on property, and they make it from leverage, and they make
I know. If I buy 10 grand of Eurasia shares at half a penny and then have 30p, there's not much leverage required at all, is there? Really?
Well, that's a great trick. That's a great trick, but
there's no better leverage than the stock market.
There's a large amount of rich people that made their money in the stock market, for sure. But the cohort of rich people that have made their money from scratch from real estate is much larger. So that's just the numbers telling you that they've got something to it. But of course, the trend is your friend until the bend in the end. A lot of people are saying, as Zach is really saying, well, at some point this is going to come off the rails, and the woe betide everybody.
Yeah, but I don't. Yeah, but I don't. I'm not even. I think it's always a bad thing to do that, to be the sort of the harbinger of doom and saying, oh, Bitcoin, cryptos are going to go to zero, and the real estate's going to go to zero, and gold's going to go.
Yeah.
That doesn't get you anywhere in life.
It's
I think
like the Bank of England that said that maybe Bitcoin is going to go to zero.
They wanted to go to zero. I mean, that's the thing. I mean, like, they would say that, wouldn't they? I mean, that's the perfect one.
Like kind of like a very weird statement from them. If after so many years you haven't actually realized that crypto is going to be
there's no difference between crypto what fiat currency is just paper crypto. That's all. There's no difference between fiat currency in my mind to crypto. The only thing is, you don't have a £1, one Bitcoin note. I mean, there's no difference whatsoever. The only difference, I suppose, the main one is that bankers and central bankers and governments can print as much as much fiat as they like, but on the stock market you can print as many shares as you like. So that nobody's trying to ban the stock market.
Yeah, exactly.
And that is the point, there, isn't it, Clem? The stock market is the old version of crypto.
I think people have tried to regulate the stock market out of existence on many occasions.
Yes.
And so I think there's nothing new under the sun in this.
I think that if you don't, at least with small caps, I mean, literally, people can get away with murder. At least with the crypto price, you can sort of see where the prices are, and the people getting away with murder there because they just invent a new coin. But you list a new company on the stock market. There's no difference for me. Then that's just like having a new coin. There's no difference at all.
It's enterprise and entrepreneurship for sure. And it's interesting that the young generation are really the progenitors of this crypto move, and they are actually kind of repeating what our older generation would do, but in a slightly more abstract and slightly more gamified and slightly more digital native way. Because when I made my first killing in the market, I went out and bought myself a gold watch, and it cost 20 grand. And all it did was tell the time. And I could buy that same watch for $15. But I wanted to buy this crazy item, this crazy status item, because I had this wonderful event, and the kids are doing the same thing with CryptoPunks, apart from they're 10 times more expensive than my crazy watch was. And it's the same deal. Hey, look at me, I'm so clever. And so it's no different from, and now you can go on to Christie's and take a look at watches selling for 100 grand, 200 grand, and it's the same thing. I've got an Apple Watch that sings and dances and talks to me and takes my telephone calls and measures my heart rate and tells me whether I'm perspiring too much, and yet it costs however many $100, and yet somebody wants $600,000 for a mechanical watch that does nowhere near as good a job, and people pay that money. So there's no difference from old fogies buying Patek Philippe's and young fogies buying a crypto.
Yeah, exactly.
Or riding a horse, or driving a petrol car, or driving a Tesla.
Listen,
well, in a sense, there's a matter of speed and what falls out the back, I think, is fine. Outside of that,
Zach, I want to go back to last episode, because your guru skills are coming up, and your quantum blockchain went through the roof. So
what can I say? I'd actually forgotten about it, which is probably that's actually the best thing to do, because if somebody puts you on the spot, then it comes out of your subconscious mind, not your pre-planning evil manipulative mind. And that was just like, what do I like? And there's no time to think, and that's the one I like, and that was it. So and I forgot about it as well.
The show that it did that.
Yeah.
I think one couldn't possibly comment about that, but there we are. Yes.
Okay, listen, let's talk more about good unicorns and good
unicorns.
Shares.
And there's a certain irony to that.
Yeah, exactly. Okay, Zach, you want to start, and then Clem can help us with some other good company we should look at.
Well, I think maybe Clem can go first, so I can at least give myself 5 seconds to come up with a shooting from the hip type.
The next one.
Let me draw my 45. I am somewhat amazed at BHP. Broken Hill Properties, as they used to be called, big mining company. Now, if you're a believer in inflation, and I remain so, although I sense that there's a certain amount of panic out there amongst politicians because they're caught between the devil and the deep blue sea. If they don't make inflation, they're going to get fired. If they do make inflation, they're going to wreck their pensions. So that's slightly amusing. But let's just say there is going to be inflation for a couple of years. Commodities, you can't cheat commodities. That's why they're commodities. If your value of your currency goes down by 10%, they go up by 10% in price. That's what commodity is. That's why it's called a commodity. Now, Broken Hill obviously is a miner, and they make commodities, and they make lots of commodities you like, and they're very fashionable ones, the ones that are going to be very fashionable too. And they're pulling themselves off the UK market as out of the FTSE 100 to move their listing to Australia, where the valuations for companies like BHP are much higher. So basically, it's a move to get off sluggish bargain basement Britain and get onto, you know, a more zippy market, Asia-facing, commodity-facing market. So that should mean that over time, the price should go up significantly because it's going from a dead duck market to a zippy, sizzly market. On top of that, they're spinning out their oil and they're merging it with Woodside Petroleum, I believe it's Woodside. And that normally means that those and these holders of the BHP will be getting this shares in this new entity. And that normally leads after a period of consolidation and WTF from the market. You know, what's this new company? You don't understand it. After 5 or 6 months, that new combined company would get a real kick up the backside and get a nice rise out of that. So you've got BHP moving from dead duck London Stock Exchange to the ASX. So you expect a nice uplift on that. Can
I stop you here quickly?
Can I just finish my chapter?
Okay, it was about
only a few more thousand words to go. So because there's a punchline here. So not only are you going to get an uplift on BHP, not only are you going to get new shares in this Woodside Oil Company, which is going to have an uplift too, you're also getting 11% dividend. 11% dividend. That's almost like.
That's the face.
So anyway, chapter closed.
So Clem, if he's moving to the Australian Stock Exchange, do you see there will be an uplift in the price also on the London Stock Exchange?
Well, one will drag the other one up because they're going to keep their listing. I think they've got an ADR in the US, maybe not, but they'll keep this as a secondary listing. And you know, your primary listing is the one that should drive your price. And it's coming out the FTSE 100, or it has come out the FTSE 100, and that's why you see that drop that you've got there. And so there you go. Where's my dividend? Scroll up to the top again. Go on, scroll up to the top. No, not Barron Oil, not Boyle. What a name for an oil.
Oh, sorry.
Just type in. No, don't do that. No, go back to that. Go back.
Yeah. I'm not sure why Barron Oil was there.
Type BHP. That's the one you were looking at last, I guess. Hit return. Here you go. Scroll down now. Right. There you go. 11% dividend. Yeah. And that dip you're seeing in the share price is caused by the fact they're delisting and coming out the FTSE 100, and you know, probably a little bit of sour grapes in the UK. But you know, 11%. I mean, that should be double. I mean, it shouldn't really be paying more than 5% dividend, even in the you know, best of worlds. So if you take somewhere like Newmont Mining, which is NEM, if you go up there and where it says BHP, no, go back.
Oh, same financial, okay.
Just type in there, get rid of it all, totally clear it out. Back, delete it. NEM. Right, Newmont, yeah, go for that one, yeah. So if you scroll down, and what dividend are they paying? I think you've gone past it. Scroll up a bit. Is there somewhere? Where's my dividend? Where's my dividend? There we go, dividend yield, 3.8. So an American miner will be getting a 3.8 dividend. So call it 4, right? So you'd be looking at a 250% uplift on BHP's share price on that rate. So, you know, you've got commodities going up because of inflation. You've got them shifting gear onto a more sizzling market. You've got them splitting out their oil into a pure play oil company, which simplifies their value prospect. and it gives you shares in one with a a good story for upside on that too. That's another commodity that's going up. I'm sure everybody's noticed it's gone up. So I can't pay you 11%, and I do have a lot of it.
So Clem, when inflation is going up and maybe there is going to be hyperinflation, it would be sensible to have a portfolio that is mainly commodity based?
Well, I don't think there's not going to be hyperinflation because they don't need hyperinflation. What they need is about 50% inflation over the next 3 or 4 years, and that's what you'll get. I believe, and Zach will violently disagree, that the central bankers are totally in control of the money supply. Yeah, and they've probably terrified all the politicians into realizing they can't just keep QEing forever, because they will get 15, 20, 25% inflation. But they've got their reporting down. So when they say 5%, it's actually 10 or 11%. And they just need to do this 5 to 11% over the next 3 years. And GDP to debt ratio will have evened out. So that's what the plan is. So you'll get a devaluation of money by a third or more, maybe a bit more. So anything that's 10 now will be 50. Sorry, not 50, will be 15. Yeah. So if you're sat there with your pension and you just sat there taking it and spending it, at the end of the process, you'll have a third less of buying power. And that's pretty drastic.
Okay.
It's the difference between going on holiday to the Seychelles and going on holiday to Brighton.
Yeah. I'm not sure about Brighton. It's not really holiday though. You can't even. Well, you can't put the swim costume because it's too windy, and then if you do, you get burned. So
you don't need to put a swimming costume on in Brighton. So
yeah. So how you can sunbathe?
No, it's a nudist. It's
a nudist big.
Okay, it's a nudist joke.
That's where
it's very LGBT as well. So it's perfect for people like me.
What is LGBT?
Oh. Well, you're all well.
You are now dancing.
Oh, it's always good winding Steffi up.
Okay, really next time you explain to me. So let's stick with the stock picking and with the ideas, because we like that.
Go for it. Go on, ask Zach a question. He's had about 15 minutes of me ranting on about BNP.
Go on, Zach. Start.
Yeah. So my stock of the day is actually Deep Verge, which I think for 2 reasons. One, I really like the CEO Jerry Brandon. Is a lovely, clever guy, and management is obviously very
Deep Verge.
Deep Verge, right? There's many prongs to the business, which is possibly the reason why it's not rated as much as it should, because one of the things about the stock market is if the punter has more than 2, well, normally more than one thing to think about, that's too much, but if it has 2 or 3 different businesses in a business, they get confused and they just value it at the part of the business which is the least good part of the business, or the only bit they understand of the business. So I think the punchline here is that they're involved in monitoring water supplies, and that's obviously very useful now in the COVID sphere. So I think they've got deals with China, and basically I think they're going to corner the market in the sort of early warning systems on COVID in the water supply, which I think is a pretty good thing to do. And that's probably they also do sort of skin testing and other things like that, but it's better just here to focus on that. I did think at 20p the shares had hit the bottom. There was a good announcement last week, and there's another one today with the water deal, and so that is my pick. I just think it's a nice little, it's a mini conglomerate in the scientific area, but the difference is that most scientific companies don't really generate income, and I think this will generate a very good income.
So Zach, are they saying that there is COVID in the water supply?
No, well, it's one of those things that governments and others would pay Deep Verge to install their water monitoring unit, and then they would be able to give an early warning system on whether there's COVID in the water or anything else, any other pathogens, cocaine or whatever else goes around in the hormones, whatever else is in the water. So I think water is actually, obviously, there's many commodities in the world, but actually water is probably will turn out to be the most precious.
Yeah,
And
I agree on that.
so in fact, I think it's quite a sort of a new age, slightly clever, maybe a bit too early type of thing. But when the penny drops, that actually it's water, not oil, let's say, or other things, then that is important.
Yeah.
Then this business, I think, will do really well. I think it's much better than all that COP26 crap and all the other things that's going on, because all those things are just an excuse to try and tax us. And I don't like that type of thing.
I agree on the water. That's also why everybody is now going for oat milk instead of almond milk, because to create almond milk, you consume more water. So yeah, that's just a bit.
Yeah, so that's the one. So they raised their money recently, so that's out of the way. And I think, as I said, 20p looks like a good base in the shares, and it's a multi-pronged business, but it's not the one-trick pony that quantum blockchain was. That was obviously just a bet on quantum computing. This is I suppose it's a bet on monitoring rather than anything else. So a slightly different area.
And it's up 10% right now. And
Yeah.
talking of things that are up quite a bit, Bitcoin just exploded from 59,000 to 61.
Ooh, okay. Let's look at the crypto.
Kaboom.
Okay, yeah, and Ethereum is following up.
So if you click on, you see where it says chart in the top right hand corner, Steffi. No, go to the top. See the top chart?
Yeah,
Bitcoin above it. If you see no, don't do that. No. Go back. Right. See where it says filter list? Filter list. To the right.
List.
Go to the right, Steffi. Go to the right. Down a bit.
The list.
Oh, right, yeah.
This
is like the golden shot, isn't it?
Yeah, don't click on it. Don't click on. Oh, that'll do. Well, so you can see it there. You can see the intraday. If you clicked on where it says deeper daily, it would give all those charts in the daily chart. But anyway, that's Bitcoin. So yeah, it's trying to make a comeback. It's trying not to show that as the top of the market, a double top.
It's amazing that when it was down one day, whenever it was down, it went below 60,000, and then literally the headlines immediately: Bitcoin crash. What do we do about Bitcoin now that it's crashed? I mean, who writes that stuff?
Journalists who want to get people to look at their pages. I mean,
Yeah.
interestingly, I was writing a lot about Bitcoin before it exploded, saying it's going to explode, and the right headline, you get 2 million views, and I mean, that's happiness, isn't it? But it's strange how all these terms have been corrupted over time. So, for example, a crash, which is, and still in my mind anyway, 25% drop, a quick 25% drop, that is a crash. Or even it could be a slow 25% drop. So a crash is 25% or more. And if it's a crazy thing, it can drop 75%, can crash 75%, but generally a crash is 25%. And then all the bozos on TV started to say, well, it's dropped 25%, it is now a bear market, which is like complete insanity, because a bear market is when it starts to fall, not after it has fallen. Because you're meant to say, well, it's in a bear market, that predicts that the trend is down. That's why it's a bear market. Bull market, that predicts that the trend is going to be up. Not to say it's gone up 25% and therefore it's a bull market, because then it's happened and you've missed it, haven't you? So it's crazy. So now a crash is 3%.
So Clem, are we going to see a new high very soon?
Well, I think one of the things I think people need to have to succeed in investment is to disagree with themselves. So I think that Bitcoin is going to go down to 20,000, but actually the market says it's going to go up. And I'm looking at that chart and I want to draw a down chart, and I want to draw it going down to the 30,000. But actually, I think it's quite likely to whip around from here and go straight to 80,000. Because when I draw a bull chart and a bear chart, because you could just look at that and go, if we're now in a bear, it's going to go here. If it's in a bull, it's going to go there. And I think we should be in a bear. But this is what a bull would say is going to happen. Bang! It does the bull thing. And it keeps doing that. It keeps doing the bull move. And if this is still a bull market, it's going to go straight to 80,000. But I'm not backing that because it's too dangerous at these levels, and the percentages that on the upside are too small.
But Clem, you were saying that last week that is because there is a crypto FOMO, a crypto institutional FOMO in crypto.
Yeah, but take this for example. Something like Compound, which has had a bit of a sticky patch, could go up 80% in the next 2 or 3 weeks. Easy peasy. Arvigocci could double. Yeah. So why would I want to risk a downside on Bitcoin of 20, 30, 40% when I can actually a punt on a 70 or 80% rise on something like Compound? And if you go to Compound, you'll see that they had a little bit of a hiccup. Ooh, yeah, they had a little bit of a hiccup because they gave away $80 million to their user base by accident. Yeah, now they've tidied that up. So you would naturally imagine them in the overall bull market to go back to 500, easy. Yeah, so that's 200 on top of 300. Thank you very much. I'll take that risk ratio all day long. Why would I want to look at a 50-50 of a move to 80,000 on Bitcoin or a move to 30,000 on Bitcoin when it could go either way? Or put Arvigocci up there.
Yeah.
And by the way, I have these Arvigocci, right? So this is a really exciting metaverse.
Yeah. Oh gosh. Yeah.
Yeah.
So
now look at that chart. Isn't that lovely? So if you bought it at 50 cents, you'd be 400% up already. But I actually bought a ton yesterday on the basis they're coming out of their metaverse. And if you go back to their quote. If you just go to the quote on them while they're away from the chart. Oh yeah, stop there.
Oh, okay. Well, here we are.
No, it's Compound. You want to go forward again or back to wherever you went. Where have you come from? Return. Arvigocci, there you are.
Yeah.
Right. So you'll see. Stop moving it. Stop. So the fully diluted market cap of Arvigocci is 100 million. Yeah. So, and because they're nearly fully diluted now, it's 63 million is the maximum they can dilute to, and they've already done to 54. So 113 million seems quite spicy, but for a token like this, you would expect it to be sitting at 300 million. And it probably will be sitting at 300 million shortly. So there's a 300% upside. So that's where I think people should play, because it's a skill game, finding really good tokens and backing them, rather than sitting on a random wall with the Bitcoin, which is drives the whole thing. And if you think Bitcoin's going to go up, Arvigocci is going to go up 3 times for any $1 you're going to see in Bitcoin. I mean, which is going back to Shiba. If you believed in that thing, if you were part of that zombie horde that believes that that's the best thing since sliced bread, and you bought that at Nuckens, you are absolutely singing. They're absolutely singing. I mean, somebody bought $8,000 of it 3 years ago. It's now worth $2 billion. I wish it was me.
Yeah, but just to go back to that point, it's just the same as buying a new issue penny stock, isn't it? I mean, there's no difference at all, really.
Well, there is a difference.
I mean, that's the point. I mean, but I'd like to know what the difference is, because it's sort of.
Yes, I know. Let me.
It's good. Yeah, it's good.
Crazy penny stocks, generally speaking, have a story and no business behind them. Whereas these tokens, 90% of them have no business behind them and they're just stories. But 10% of them are going to change the world. And you can't really say that about penny stocks, because they all go to zero generally. And maybe 1 in 1,000 is a decent company. Maybe you could say 10 in 100 become reasonable companies. 10 in 100 of these businesses here are going to absolutely rock the world. So you've got that.
You think it's that much? Do you think there's a difference? Because it's like, isn't it like the it's almost like the whatever that Bell distribution curve or anything else? How could the ratio be better here than it would be on the stock market or anywhere?
Well, because
it's like setting up a new restaurant. I mean, whether it's online or it's here or there, I mean, doesn't, or where it is, it's not.
There are some very important systemic differences. Here, Bill Gates can float his company at a value of 100 grand and become Microsoft worth 100 billion. There's no benchmark that you have to get over to get listed. to start the game, to raise money. You don't have to get through the regulator. You don't have to do huge documents. You don't have to get crushed by the regulators. You can just, you know, JDFI, just flame and do it. Yeah. So you can, Tesla was never a penny stock. It was worth, you know, many, 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 many millions the moment it came out onto the market. Here, a Tesla could come out of nowhere. You know, a Musk, the next Musk, well, look at Vitalik Buterin, right? He didn't set up Ethereum with any capital. He came out, got a group of people together. The market loved him, gave him 700 million, and Ethereum out of nothing. There's no entropy here. There's no grind. There's no grit in your engine. It's pure business at the speed of light, which is what Bill Gates talked about 25 years ago. That never occurred because in the real world, outside of crypto, everybody's trying to slow you down. Everybody's trying to take a piece of you. Everyone's.
So that is, I mean, that's the case between regulators, lawyers, you know, the HR and all the other things that there are in the world. You're completely ruined.
Just think about how it costs to list a company. I mean, you have to pay advisors so much, where here, yes, you have to pay team members. Some they actually take tokens.
Look, I could go out tomorrow and start a project and have it listed for nothing.
Yeah, exactly.
Yeah, and I could be, and if I want to build something great, and OPC is building projects. Yeah. You know, you don't need the capital. You can move at speed. Now, of course, every criminal can also do the same. So you get a huge pile of poo and a few absolute diamonds. And so that's where the skill game comes in.
Are you also saying that the people who enter this arena are of a better quality and also have less barriers on them than somebody who, if I float something on AIM, for instance?
Well, for a start, the people actually doing stuff are some of the best, smartest, cleverest coders on planet Earth. You know, the coding party that goes on in the world is actually in crypto all the smartest programmers.
All right, so the barrier to entry is actually so high that only the best by definition only the best can go through.
The barrier of entry, if you are a great programmer, is zero. If you want to start a software house and you're a great programmer, the barrier of entry is millions of dollars. That's what VCs spend their life doing, finding great programmers and basically, you know, putting them in chains and with venture capital money to try to make something that's worth $1 billion, to make these unicorns, right?
Yeah.
Well,
but that's like saying you can't. That's why you can't have a short person in the Harlem Globetrotters. I mean, that there can only be people who are above 6'6" or something like that. And here you can only have people who are have a certain level of talent or IQ or ability or whatever they
not
have.
necessarily. Just like in the penny stock business, for every one good business, for every one business with a hope, for every one business actually grinding out their business model, there are 9 promoters singing the praises of stocks where people are not doing anything. They're just trying to issue paper for your cash.
Yeah, exactly.
But the actual entropy for talent to get going is very, very, very low. And the actual opportunity is vast because this is revolutionary new technology. This is 1975 all over again. This is for computing. This is 1997 for the internet. This is a launch pad for technology that is world changing.
So whenever anything new happens, you get these the early players who, you know, it's like even like in music, you know, the first rock bands or the first punk people or whatever, a new style or a new phase creates a first mover advantage and a massive opportunity.
For sure. And the thing is about crypto, it's not just about cryptocurrencies. So cryptocurrencies, then along came DeFi, which is financial services using crypto and blockchain. And then NFT came along, which is basically a way of putting digital assets and having a key at the safe for digital assets. And that's becoming massive. But that's just the beginning. There's going to be, now there's the metaverse. I mean,
exactly. And then there will be the DAO. There will be the next.
Well, the DAO will be the next, but there'll also be other things that no one's even, well, they might be doing them, but no one's actually defined them as a category that's going to be big. That will also come along. This is like the industrial revolution for computers, what you're seeing here. So this is as big as the internet and probably bigger. And this is the early days. And if you can split the pack from the con men to the people that are genuine, and you can do that just by looking at the technology, then you back the genuine people, and you're in an apple on the ground.
So it's like a Standard Oil situation. So the new railroad, the new like oil did that, railroads and all that stuff. So is that
absolutely, but it's broad, so it's more like electronics.
Can I just add on that, when Clem said about backing the real project, something that people should be aware in crypto is that many projects, they go out there fundraising and getting money from venture capitalists before they actually build something, right? And I mean, I can just bring up an example like Bioconomy that is talking about building bridges where they haven't got anything live on a mainnet.
Well, I think that's probably being a bit unfair to them. But they're doing what they're doing, and software development is always a nasty business. It always takes much longer, it costs twice as much, and that's how you judge the people to invest in, by their offering that you can see. And when you can go onto their site and click on their product, you're halfway to making a lot of money in crypto.
Exactly.
You're halfway to make a judgment on the quality of their code and their execution.
Yeah.
And if you've got quality developers and you execute well, you can build a billion-dollar organization from that basis in crypto right now, because it is a gold rush and it's a wild west. And the con men, they're the movers and shakers, the real McCoy. And if you can find the real McCoy, that is a lot of money to be made there. And, that's been the case now for several years in crypto, which has gone from something worth 50 million as an industry to 300 million as an industry to now 1.5 trillion. And, the stock market in North America is worth 25 trillion. So the upside of total market value is, 10, 15, 25 trillion, and perhaps even more, because this is actually replacement technology for the stock market as well.
Yeah, and when in the stock market there is also this. I mean, we are talking about company listed on AIM. Many CEO now, they said, "Oh, we don't need PR," because they spend all their time doing PR themselves. So instead of running the company, they just they are on marketing all day and they are not doing anything. That's why they don't need PR, because they talk to investors directly instead of running the company.
It's the American model.
Yeah, exactly. But then, then what about your business? You're going to.
Well, that's why you have a COO. You hire a COO, and
they can't afford a CEO, Clem. They have three.
They're just promotions, then, aren't they? They're not proper businesses. But if you look at big US companies, the CEO is basically the spokesman for the business, and the COO is the guy that and whips the people who are pulling the oars.
Yeah, right. Okay, so anything else, Zach, that you want to add to the table? Then I've got a question for Clem about Tether.
No, I'm not going to answer any questions about Tether.
Before I forget about it.
Look, I mean, there's a lot of negative PR companies out who go round and get bad PR for the competitors of people. And I think that utterly sucks. Basically, wreckers. And, the wreckers are out for Tether. And they've been out trying to wreck Tether for years now. And I think the negative PR brigade are evil and wicked. And you can see them out in force with the vaccines. I'm sure there are vaccine companies paying negative PR companies to trash other people's vaccines. Yeah. And I think it's one of those evil developments that we're seeing in our society today of lies and dissembling. And I think Tether is a victim of negative PR and wreckers. And, you see wreckers in the stock market, we see people short and distort. And, you know, I think that those people will burn in hell. If there is a God, they will burn in hell. And it's an evil, terrible thing to do. And anybody that's being a victim of negative PR campaigns, these wreckers, I feel sorry for them. And I think that's a very shameful thing. And I'm absolutely certain Tether has been attacked by negative PR operations, and for a long, long time. And I wish them the best. They have got this stable coin. They invented it, and they invented the whole genre. So you know, why be? So maybe they're only 80% backed by liquid assets. Your bank is only 10% backed.
Yeah, that's a good
So
point.
what is the big hairy deal there? So, you know, the day Tether is as backed and with your deposits as Barclays Bank is backed with your deposits, is the day that I might go, that's interesting. Yeah, that's kind of interesting. But as it is right now, you know, so what?
I'll just say on that, actually, on that point, there are all these negative influences, obviously on the stock market and elsewhere. I do think that luckily, most people make up their own mind in the end. I think that, you know, I don't think the people who knock stocks or knock concepts are, I mean, obviously they keep trying and they'll keep saying horrible things about vaccines or whatever they do. But luckily, I think that most people see through them. So I think it's not quite as depressing maybe as you're suggesting. And actually, a lot of the time, you know, you see on the stock market, the companies which are being hit the worst, and actually even the company I mentioned before, Deep Verge, has been knocked a lot, you know, personal comments about the CEO and everything else. And actually, you see that once they get through it, they actually probably do as well or even better than they would have done without that negative. You know, you get a short squeeze. You get a short squeeze is a squeeze effect as well. And I don't think it's not necessarily a bad thing. I think free speech is good in that way, and you know, the truth does out in the end as well.
I think it's, yeah. I mean, if you look at companies that are ridiculously overvalued, you could say that they are the victims of very good PR, positive PR. So it's definitely a two-sided coin, double-edged blade, etc. And you know, but I just think that it's negative PR. Companies and campaigns are particularly nasty, vicious, and evil, and one shouldn't play into their hands, even though they make great headlines, which is really how they do it. They just go to a journalist. How would you like to have a really great negative headline about something horrible that everyone's going to want to read? Well, this could be your lucky day. And you know, that's all part of this. Well, some might say death spiral that we're getting in the media.
Yeah, but I'm just saying, I mean, like ADVFN has had its detractors over the years. And part of that was obviously because you had first mover advantage. You did very well, very quickly. And, you know, there's been so many people come and go in the meantime, but you're still there. And so, you know, who cares about the negative stuff? I've
got the scars on my run to show for it.
But anyway, you take my point.
Yeah, I take the point. I don't.
But another example like ADVFN is online blockchain. It was here when the .com boom was there and building online businesses, and now is one of the projects is actually creating some amazing stuff with cross-chain transaction, which is the next big things. Because even in the metaverse, Clem, if we are thinking that we are going to bring in NFTs, you do need to make this cross-chain transaction. You can't think that you build a metaverse that is a silos, and that's where bridges are important.
I couldn't be more excited. I've got a fairly large amount of skin in that particular game, but I also have a social media policy as a director of that company, which says I can't go around social media picking that sort of stuff up, and I think that's right. I shouldn't, and I don't, and I couldn't be more excited about crypto. And funny enough, where I'm involved with it at ADVFN and OBC, it's where my heart and my creativity lies. You know, I obviously want to do the most exciting stuff, the most potential stuff for ADVFN and OBC in that zone. And it's like being, you know, it's like being a guitarist at Woodstock. I mean, you couldn't, you know, it's your moment, isn't it? It's my moment. Crypto is just awesome. I mean, our crypto traffic on ADVFN is wonderful. I love it. I absolutely love it.
So Clement, have you seen a really big increase since the pandemic for on? I mean, we saw the trade.
I still have a social media policy at ADVFN. Yeah. I'm not going to big up ADVFN and OBC on these talks.
But there was a very.
I think they're both wonderful, and I think they're underrated.
There's another 2,000 stocks out there.
No, but I don't. Yeah, no, I think you've got that policy, but it's interesting that nobody else has that policy, really, do they? You know,
well, they do, but they break their policies. And you know, at the end of the day, probably one of the reasons why we've been here for all these years is that we like to keep take the way of the light. You know, when we say we're going to do something, we do it. And although it doesn't win you much brownie points in the short term, in the long term, you build up a group of people that you work with that trust you. And, you know, that gives you a lot of survivability in the rough and tumble of the world.
Well, I hope that I think I met you when just at the start of ADVFN, and it's amazing that, you know, over 20 years later, we're still on speaking terms, albeit in this forum.
But all my hair.
I'm the same. I've got the same hair as I had then.
But I was a bunny rabbit as well, just arrived in London probably, or out to university.
Yeah, so I think there is and in fact, all three of us actually, I don't know, this sounds like a trumpet blowing exercise, but I think all three of us probably had a situation where there've been some rather dark patches in what we're doing, and people said, like, forget it, what are you doing? You can't write, Zach, all this sort of stuff. You can't speak. I mean, all the things, everything. Steph still can't speak, and so all these things that, you know, but you know, you get through it. And I think it's the same with anything you do in life, with investment or anything else like that. I mean, it's taken 30 years for me to get a grip on small cap stocks. I don't know why I went into such a difficult area. But you start seeing, you know, you start reading and seeing and understanding these things. Maybe a cleverer person would take 5 years or 3 years or 2 years, or some people can do small caps at the age of 18, or cryptos or whatever it is. So life is very unfair like that. But, you know, whoever you are, you probably have to keep on trucking.
Well, I bought my first small cap when I was 7 years old, and it was a company called Metromar. And they had a mine prospect called Blue Spec, and about
that's what it was.
No, last year I got an email from a guy in Australia who was doing a mining company that said, would you be interested in learning about our mine? It's great, it's brilliant, and it's this Blue Spec prospect. And I wrote back to him. I said, look, mate, 50 years ago, I was being told by my mum and my dad about how Blue Spec was going to be this great mine, and you're going to try to sell it to me now, 50 years later. You've got to be kidding me. And he wrote back to me and he said, yeah, it was a great prospect, and it was a great gold mine, and we're just going to go through the tailings. And they had 20 ounces a ton, and now we're going to get 0.5 gram of, you know, a mountain out of it, but it's still good. So bless him, he actually didn't run or scurry away. He came back to me with a full history of the Blue Spec mine in the last 50 years. And it still remains a speculative gold mine in Australia for my whole life.
Well, that sounds fantastic. I think I've got to head off to Brighton Beach because, you know, I miss it. And, you know, to see my friends, see all my friends down there. Obviously, Steffi won't be there, and I don't think she'll ever be there. But what was the alternative to Brighton? I can't remember now.
I'm not a nudist.
Oh, the Seychelles. It was the Seychelles, wasn't it?
The Seychelles, yeah.
But Brighton's much better.
I've the full kit, you know, the old Victorian kit.
I just wore my suit. I went to Malibu once, so I was actually just wearing the suit because I had nothing else. So that was at the time of Baywatch and everything else like that. But
I can never get away from my desk and my computer and the markets and ADVFN and OBC to go to these places.
Anyway, thank you very much, folks.
Hey,
great,
everyone.
a lot of fun.
Yeah.
I don't think I haven't laughed so much for, well, since the last show, I think probably. But anyway, there we are.